Well, good morning, everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I'm a coach and senior manager with Charles Schwab. And today we are going to talk about how to have a quick look at the market, see what sectors are strong, and then look for opportunities within those sectors. So for some of you, this may be a little bit of a review. For some of you, this may be brand new, but it's good to see so many of the usual suspects chiming in. So to Kevin and Will and Josh and Scott and Debbie, thank you all for being here. And then, the prize for the first one in goes to Rob, who, was busy stocking his pellet stove. It's a little cold in Grand Rapids, Michigan today, but great to see you all here. If you are brand new to this webcast and this is your first time checking it out, please feel free to type a greeting into the chat so we can welcome you. We've got Mr. Ben Watson in the chat today. He's a friend and a fellow coach and brings a wealth of experience. So if you have any questions, don't hesitate to ask. And between Ben and I, hopefully we have got answers for you. If you are not following us on X, you are missing out. My handle at Barbara Armstrong CS. Ben's at Ben Watson CS, and now we're both also on LinkedIn. So if you can't get enough of us by watching the webcast, going to the live events, or checking out what we have to share on X, come on over to LinkedIn and we'll regale you with, some maybe longer form content. But yeah, you can find us there also. Okay, so just before we get into the thick of things today, know that options carry a high level of risk and aren't suitable for all investors. We do a mix of options and stock trades here in this class. We use the paperMoney software application on the thinkorswim desktop platform. And there are some nuances and differences. One of the most significant ones for us in this class is that short options are never assigned early in paperMoney. That can happen in a live account. Have I seen it happen? Yes, I have. Did it freak me out the first time it happened? Yes, it did. So, we'll discuss, as appropriate from time to time, what to do when that happens. And if you know what you're going to do before it happens, then, you're not so freaked out when it, if and when it does. Okay. So we're going to do a very quick market overview. Why very quick? Well, because Kevin Horner does a Trader Talks webcast 4 days a week at the market open. Fridays is not archived, so you have to attend that live, but I would suggest adding that to your viewing menu if you don't normally do it. The others are archived, so you can go and check those out. We're going to spend most of today placing new example trades. We're going to do a tiny bit of trade management today, and we have one trade that we placed on Monday that has already hit our target, so we'll have a quick look at that. Okay, so what's going on? Well, let's come and look at the SPX. Oops, I can type honestly. So, the S&P 500 is still uptrending. It's just below the 30-day moving average. But, if we draw a line here, and like many of you, I'm a big line drawer. Whoops, that wasn't working. Trying to move too quickly. We are still, this uptrend is still intact, right? And it's come down to this support level that it hit, this diagonal support level, and appears to be bouncing. And if we come in up close and personal, today is a harami, a bullish harami at a support level, which is considered bullish. So we had a big pullback day yesterday, which probably had a lot of people with their knickers in a twist and maybe Chicken Little, in the barn warming up. But it looks like today things are coming back around the corner. When we look at the NASDAQ, which is our tech-heavy index, I had drawn this pennant pattern and it broke below that. And so the question is this old support line that I've drawn now going to act as new resistance? And well, we don't know. It's come up and hit its head on there once, which isn't an encouraging sign. But, if we look at the last year, so if I come here to show price as a percentage, and we come out to the 1 year mark, when we look at it from a year's perspective, we're still up 12 almost 13%. Well, and it's Friday the 13th, so it's a good thing to see these recurring patterns. When we step back and have a look, this isn't exactly a horrifying picture, is it? It isn't. So, like, stay tuned and, don't start, fretting, I would say, on this one. And then how about the Dow? The Dow 30, I think is a little less significant than it used to be, in that this is 30 stocks and they're based on the price of the stock as opposed to the market cap of the stock. But this uptrend is continuing, hit a new all-time high, came back to the 30-day moving average like everybody else. Yesterday, big down day. And today we have not quite a harami pattern, but maybe by the end of the day, it'll be, what in candlestick parlance they might call a piercing line. So, it's bouncing off a support level. And then what about our small caps? The Russell, which is the smallest of the Russell 3000, 2000 of the smallest. And, this is within a stone's throw of an all-time high also. And some might also look at this and say, well, I'm playing I Spy. And, with these lines, keep in mind, support and resistance are ranges, right? Not absolutes. Maybe setting up a bit of a pennant pattern, but it looks like it's bouncing off that support level today. And today, this pattern definitely is a bullish harami pattern if we consider this to be a potential support line. Somebody's asking what program I'm using. This is the thinkorswim platform on desktop platform. Okay. And let's come and look at the volatility index. I've taken the last couple of days off, so I'm guessing that it kind of surged yesterday. And at 1927, this is at the higher end of the range that it's been in since November, when we come in and have a look. Yesterday, not surprisingly, a big up day. And today, it looks like it's returning, regaining its sensibilities. Okay. Okay. So that's that. All right. Now, I said we were going to look at sectors. So what the easiest way to do that is to come out to public. And I know for a lot of you seasoned veterans, this is a review, come down to sector indices. Now, let's just say you hadn't already created a customized watch list. If you come to the plus sign, we're going to add a new watch list. And I'm just going to go over this again. So we want to customize this. And I don't really care about the bid. And I don't really care, customize. I don't care about bid and I don't care about ask. So I'm going to remove the ask and I'm going to return the bid and say, okay. And then I want to add a couple of columns. And one of the columns I want to add is a 3-month change. Now, if you're not following me on X, one of the things that you will see if you do is that this post pinned to the top of my Twitter feed has a 4-week return script and then a 3-month return script and then directions on how to add them. Okay, if you don't already know how to add a script. So we're going to come to setup and we're going to open a shared item and we're going to add this 4-week script, and I'd written it down, and then a 3-month script. So the 3-month script is 08R6 Baker Dog O. And these are case sensitive. And so that's 3-month return. And then we would go ahead and import that. Now I've already got it in here and then we'd go and do the same thing. So when we import it, then how do we find it? Well, we're going to come to our sprocket, come to customize. We need a description because S&P 10 doesn't mean anything to me and it probably doesn't mean anything to you. So we're going to add that. And then now that we've downloaded these scripts, we're going to come to 4-week return and add that. And then we'll have uploaded the 3-month return, and we'll add that. Now, there we go. So now we've got, and somehow this was here. So we're going to come down to our public watch list, S&P 500 sector indices. And so now we've got a title, and I don't care about these numbers in the description, but I do care about the description. And then if I click on this 3-month, we can see that the strongest sector has been materials. They've been materials and energy. And over the last 4 weeks, energy, consumer staples, and materials. And 3 months, and you know, the order has changed, but it's energy, materials, and consumer staples. So let's say we want to look at the stocks in the energy sector. And if you don't already have a playlist, here's a really easy way to set or a watch list as opposed to playlist. Here's an easy way to set it up. We're going to come to the scan tab, and we're going to say we want to look at stocks that are part of the S&P 500 that are part of the energy sector. And to get energy sector, you're going to come down to industry, and it'll say, do you want a specific industry group or the whole sector? And we're just going to pick the whole sector. And then, and those are the only caveats we're putting in there. And by doing that, intersecting the S&P 500 with our energy stocks, then we're not going to get, you know, penny stocks and all of that. We're going to get more stocks in the energy sector that we might consider trading. And if we want to save this, we're going to come to the second set of 3-line, the little hamburger thing, and we're going to save it as a scan. And so if we call it sectors energy, and I'm just putting it in all caps because I've already created these, I'm going to save that. So let's give it a different name. Save scan, energy 2. Then when we come over here to watch list, I'm going to go to personal watch list, and we can see here's the energy 2. Now, by saving it this way as a scan, if there's a stock in the energy sector that ends up kicked out of the S&P 500, then it runs a new query every time you run it. And so the way I like to sort them is alphabetically, because we could sort it by which one is up the most today or by which one has had the strongest return. But if I sort it alphabetically and then I link my watch list to my chart, then I can start clicking through pretty quickly and just see if there are some opportunities. Now, one of the things, you know, we're still tiptoeing through the earnings season. So if you might say to yourself, well, I'd really rather look at first the ones that don't have an earnings announcement or a dividend. So if we came down to VLO, just starting from the bottom and working our way up, we can see that this stock has been uptrending. In fact, you know, it's up 50%, over 50% in the last year. I'm going to just come back and change that back to a number. And it's around $199 a share. Now, it did just recently have earnings. So we could come out and look at the live news on this and say, okay, well, you know, we've got our you know, what was the result? Well, obviously the stock has gone up since the earnings announcement, but what are the analysts saying? Well, Morgan Stanley raised their price modestly to 182, JP Morgan to 217, Piper Sandler to 220. You know, you know, not all of these guys are necessarily going to be right. There's a range, but they all seem to be fairly positive. And you know, our recent high here, 206, we have some saying 220, 215. So if we wanted to set a target, how might we do that, given that it hit a new all-time high yesterday? The shared scripts on X are in the post pinned to the top of my X feed. Okay. And I will put them in the show notes down below in the archive session. Okay, and scripts, they are case sensitive and they aren't guaranteed. They aren't guaranteed as to accuracy. But if we looked at this and we came and honed in and said, well, maybe we could use a bull flag target because it's kind of come up and come down. And so that might be one target. And we could say, okay, this range was, about $27. And so we'd come here and say, okay, here was our low, a 195.99. So basically 196. And say we're just going to go up about $27. Maybe make it 26. So our target might be around 220, 221. So we could do it that way. The other thing we could do is a fib target. So we could come out here to Mr. Fibonacci. And depending on how aggressive you want to be, if we wanted to start from this top, we could come up here. That would say our target should be around 225. Might be 225. And if you wanted to be more conservative, you could say, well, this is 225. I'm cool with going shy of that. Maybe we'll make that target around that 221 mark. And then, how might we trade this? Well, we could buy the stock. We've got $18,000, almost $19,000 sitting in cash. Our guidelines in this class are that we can take a position size up to 5,000. So somebody's saying, well, VLO doesn't have a close above the high of the low day. And it does not. But where we saw it close yesterday at 196.91, it opened today at 196.95. So technically, this is considered to be a Harami pattern or an inside day, which in candlestick parlance does not technically require confirmation. But this is a live candle. By the end of the day, it could look different. So some might prefer to wait, and say, but, if you're waiting for it to go above this high, then you're not getting in until you're at a new all-time high. And that's, technically possible. But we're going to go based on this candlestick pattern, this inside day, and we are going to buy the stock. And so if we're buying the stock and you're saying, well, did you notice this is a $200 stock? Well, I did. But 5,000 divided by 200, we could buy 25 shares. And one of the advantages of buying as something is bouncing. If you say, well, I think this could be a new support level, the low of this day. And the low of this day, it was 195.71. Okay, 195.71. I'm going to multiply that by 0.97 to get a number 3% below that. So my stop is going to be at 189.84. And so how much are we risking? 189.84. So 180, we're risking about $10 a share. We're going to buy 25 shares. So we're risking about $250. Now, is there any guarantee that we're going to get out at exactly the price we've requested? There is not. If it gapped down, we could end up at a lower price. And then where might we put our target? Well, we said we're going to put it at 121. And by buying the stock, one of the advantages is that we don't have to be as concerned about how long it takes. Like this move only took 1, 2, 3, 4, 5, 6, 7, 8 trading days, 9 trading days. So it could take 10 trading days. It could never get there. So that's something to, consider. But we don't have to worry about time decay when we're buying the shares. So we're going to come out here. We're going to look at buying custom with an OCO bracket. And we are going to say, hey, when this gets to 221, we want to exit, or if it goes down to, what was my number? 189.84. $89.84. I'm going to make both of these good till canceled. And then we've got to change our quantity to 25. And then you'll notice when I change this little firecracker to a paper clip and then click anywhere on these three lines, it lines up our quantities, confirm and send. So we want to get out if it goes up $21 or if it goes down 10. Now, can we adjust the stop along the way? Sure. Yes, we are going to do sample option trades as well. Somebody asked if I could do a sample option trade. So yes, we are. And we're going to do this is a stock with a target. And we are going to compare this to a long call vertical. Okay, so we're going to come back out. So we've done this stock trade. We've got this target. If we want to put the target on our chart, and you know, I'm a big put things on the chart girl. Got to change this again. And so I'm going to get rid of these. Oh, I should have put down that this was a fib. It's a flag target. So here's our target. We made it 221. I could put flag target here. So we'll know how we chose that target on the right. And we just bought it today. So when we look at the chart, we know exactly, you know, when we bought it and when we're, you know, when we place this trade and when we're planning on exiting. Now, if we were to do a long call vertical, if you're not familiar with that strategy, that's coming a little more up close and personal, the idea is that we are going to buy a call, and this is a $200 stock, so the calls might be kind of expensive, and then we're going to sell a call above it to help fund the purchase of the call. And then the ideal strategy, our goal is for it to trade above the strike we've sold and to stay there. So one of the things that kind of we try and do is if we come out, you know, 35 days to the monthlies, we've got lots of volume here. We've got a 50-cent bid-ask spread. And we are going to come to buy a vertical, and we kind of like to bracket the current price. Now it's almost at $200. So this is going to cost us more because this only has to go up by 11 cents and then stay there, you know, for us to make what we want to make. And what we typically want to make is a 50% return. So we're going to take our 280, multiply it by 1.5 and say, when this gets to 420, we want out. And so we're going to do two. We're risking $560 on this trade, which is at the high end. And then we're going to create, here. I'm going to go to single order, first trigger sequence, this advanced order in the bottom, and then right click and create an opposite order and say, when this gets to 420, get us out. Now, we're going to manage these on a daily basis by looking at them because we're going to also exit if it goes down by 50%. So if it gets to $1.40, we're going to exit. Now, somebody's saying, why not do a short put vertical? When I looked at VLO earlier, the bid-ask spreads on the puts were really wide. But let's look at that again, because that might be an option also. So this is going in our long call vertical bucket. And we're going to compare this to the stock. With a flag target. Okay. Okay, so if we come up here and somebody said, you know, why not look at this? And you know what? Let's look at it. I like the way you're thinking. Because a long call vertical is typically more directional. Like with where we put our strikes, it doesn't have to move very much. So our low here on this day was 195 and change, and this was 195 and change. So if we could sell the 190 strike, which is, quite a bit lower and still get enough premium, that might be kind of nice. But look at the bid-ask spreads here. And like Ben has said to me, watch how quickly you say bid-ask spreads, because it can sound like something else. But here it's 40 cents. Here it's like $1.30. And if our rule is that we don't want the bid-ask spread to be more than 10%, we don't want it to be more than 70 cents. And so that breaks our rule. And so some rules are kind of guidelines, and I tell the story of my son on that one, and some we kind of don't want to break. And if it was 60 or 70 or 80 cents maybe, but like this is $1.25. And it can make it harder to get out when you have such a wide bid-ask spread. Yeah. So that's why I chose the long call vertical on this one. Okay. So you might say, she's talking about rules. Where'd she get these rules from? So I want to show you, if you come to the Trader Talks webcast, if you haven't subscribed to them already, you may want to, consider doing that. The first thing that comes up is whatever's currently being taught or what's coming up next. Okay. And then if we come to the playlists and scroll down, there's this, it's really a folder I created called the Trade Management Mini Sessions. So these were never done where you could participate live. I just recorded them. I'm doing a series called, candlestick patterns. And we just pick one candlestick pattern at a time. We've talked about a couple today. And one is that bullish harami. And so if you're not familiar with these candle patterns, they're all between like 2 and 5 minutes long. A lot of them have had thousands of views. I just posted this one on what a doji is, the day before yesterday. So, you've got a long weekend coming up. If you'd like to do a little binge learning, this might be a place to go. But if you scroll down, I've organized them by color. There's one on short put verticals, an example trading plan. There's one on long call verticals, an example trading plan. There's a simple stock investing trading plan. So, there's a bunch here. Also, and I just re-recorded that how to customize a thinkorswim chart. It had aged out, but here's, if you want a quick review on how to create sector watch lists, here's a quick video on that. And there's a bunch here. I don't know why, there is a spread difference, why the difference between the spreads is so much wider on the put options than the call options. Ben, if you know, feel free. To chip in on that one. Okay, so that's VLO. And, could we look at some other stocks in the energy sector? Well, let's come back to our watch list. And we, kind of started at the bottom of the alphabet. How about we look at APA? So I'm going to click on it. We're going to come to the chart. So this might be considered a piercing line, but when is earnings? February 25th. So you might say, wow, maybe we could do a swing trade. But, this is like, it hit a high of 28.56. So the 25th, we'd have, like not quite 2 weeks, a week and a half before earnings. If we're trading conservatively, like some might do this as an earnings trade, as an example earnings trade. Others might say, yeah, I don't think so. But if we look at this 27.70, 28.56, that's only about $1. In fact, let me do the actual math. 28.56 minus 27.70, that's 86 cents. So you might say 86 cents, like what? Like, are you nuts? Like, that's not worth, doing a trade. But if we said, okay, 86 cents divided by our entry price of 27.70, it's not nothing, actually. You'd be surprised. It's 3%. Well, if we could get a 3% return in like a week and a half or so, like that's not too shabby. And we could end up, not doing well. Yes, I addressed that, Andy, like earnings is coming up. But so that's why I'm thinking, if you want to just kind of get a little win, we had this big pullback yesterday, which some might say it's like pulling back the slingshot. Now, the slingshot could break and things could keep falling down, but, it would appear here, and this is not a Harami pattern, because today opened lower than yesterday's close. But some might say, well, it's a piercing line. It's up over halfway through this candle, which is considered bullish. So, and we could do this with the stock. We could do it with an option, because this is a $27 stock. So we could afford to do an option trade on that. And, we're going to be in it for a short amount of time, right? So let's come to the trade tab and say we could do let's just do 100 shares. We could do more. How many more? Well, we could come to 5,000 divided by 27.70. We could do 180 shares. And then where would we put our stop? Okay, so stop, here's our low, 26.45, or we might even want to use this 30-day moving average, 26.05. So 26.05. And let's go 2% below. Not that I'm suggesting we always change times 26.05 times 0.98. But it doesn't have to be 3%. If it's a really volatile stock, you might want to make it, 5% below. And then our target is going to be this 28.56. Okay, so this is going to be our target. And it's a swing target. Show that on the right. Okay, so we're going to come in to our trade tab. We are going to right click, buy custom with an OCO bracket, 28.56. And our stop is going to be at 25.53. So this time we're risking more than we might make. But, it's a delicate balance with a stop, because you do want to be able to get out without losing your shirt, but you also don't want to get nicked out on a wick and then have the stock keep going up, right? So, it's a delicate dance that we do. And, our expectation is that this trade is going to work, but we're always prepared in case it doesn't. So we're buying 100 shares. Actually, we want to buy 180. Click anywhere, confirm and send. Is that under 5,000? Yep. Stop with a target. And we're going to compare this to a long call. Now, what's the advantage of earnings coming up is that volatility might continue to increase. And what does that tend to do to option prices? Well, they tend to go up with it, right? So if we look at this, here we have our at the money strike. We've got tons of contracts here. So, it trades more than 1 million shares a day. So if you go and watch these webcasts on, I think I did one with long calls with a 1 ATR target, or with a swing target. We want over 1 million shares a day. We want at least 20 times the number of contracts. We want a tight bid-ask spread. So, we have these things that will qualify. And then if we look at buying, if we buy the first strike in the money, so this is basically half the price of this will move by 34 cents. So we actually get a bigger bang for our buck because, you know, if I had to double this, you know, I can buy 2 of these for every one of these. If I buy 2 and it goes up by 68 cents, like as a percentage, you're further ahead. Does that make sense? So if I look at a 34-cent increase divided by the 95 cents I'm paying to get in, that's 35%. If I look at 55 cents divided by the 196 I'm paying, that's 28%. So sometimes buying the at the money or the out of the money strike, you know, you might say, well, I'm getting paid less, but this is a, you know, Delta tells us the amount this option will increase in value if the stock price rises $1. So we're going to go with this one for that reason. And we are going to right click and we are going to buy custom. And this is a swing target on this. So with an OCO bracket. And so we're going to make our stop, and you'll notice the default is for it to go $1 below the current price. That's why it's saying minus 12. If this loses half its value, we want out. And then if it goes up and hits our target, and what was our target again? 28, was it 28.86? 28.56? Okay, so I'm going to come to this disappearing, reappearing sprocket and say if and or when this comes up to 28.56, get us out. Now, how much could we lose on this trade? Well, we're buying a call. Even though we put in an exit at half the value, we could lose all of it. If it gapped down dramatically, we could lose all of it. And so if we do 5 of these, we're risking about $500. A little bit less, 450-ish maybe, $440. Now it's saying our max potential profit is infinite, but we put a swing target in. So we're just looking to make a little bit. So we're saying, hey, if this goes above 28.56, sell it. Or if it comes down, you know, and it's worth half as much, not going in the right direction. Okay, so we're gonna, so this is a long call. And we are going to compare this to the long stock with the swing target. So they both have the same targets. So there's, you know, multiple ways to approach something like this. Now, you know, what else might you want to look at? Well, we could look at, you know, coming through our list, we could look at Halliburton, we could look at Fang, you know, and look at that's, you know, that's been tracking off the 10-day moving average. And this is called a bullish engulfing pattern here, which is pretty bullish at a support level, you know, but we've got earnings coming up on the 23rd. So with Hal, we don't have earnings coming up, but you know, the climb hasn't been as steep, but could we look at a short put vertical on that? Or KMI, that's hitting a new all-time high today. So there's lots of places we can look. And, you know, I thought I'd focus on this today, but AU has this bullish Harami pattern happening on the charts also. We've placed quite a few trades on that. Now, some you line drawers, and I am one of you, you know, might say, well, I see a bit of a pennant pattern setting up. Maybe we should wait till it breaks out. So, you know, maybe we look at this one again on Monday. But we did have a stock hit a target. It was Newmont. And we did 2 trades. We did a long call vertical at 115 and 120. And then we did another one, you know, just so we could compare. And it was the same exit but we did 120 and 119, only a dollar wide spread. And we did 5 of them. Why did we only do 5? Because we were risking 50 cents. Well, because we did this other one that we paid 270. So in total, we were risking about $500. But we got stopped out on this. Well, it wasn't a stop. We got out on this at 95 cents. We placed it on Monday. We got out on Wednesday. And so, what did we make on this? What did we make? Because it's always nice this is when it's nice to go through the numbers. And we've had a lot of nice experiences this year. So we paid 50 to get in. We got out for 95. So we made $45 per contract times 5. So that's what, $225? Not too shabby. We call that a base hit. So we're happy campers. And you may say like, oh, well, that's not all that in a bag of chips, but it buys you a lot of groceries. And our kind of goal that we just kind of made up in this class was that we were trying to earn $200 a week. And we started in January with 25,000 and we're now up over 30. So we've got like some extra in the kitty. But as a percentage on this trade, we got in for 50 and out for 45, sorry. So we made $45 on a $50 risk. And so that was about a 95% return. I did the math. 90. Sorry, I exaggerated. Now, is that typical? No. And is that what we were aiming for? No. And could this have been a bit of a paper money fill? Like we aimed for 50%. So we got in for 50 and we were live in the market. If we look at the order history on this, our target was to get out at 72. So if we come back and we look at the 11th, like it gapped up on the open. And so we got out, I'm guessing, pretty close to the open on that. Trade history. Yeah, we got out at 7:54, like in the first half hour the market was open. Yeah. So if I haven't looked at this in a live account, so this might have been a bit of a paper money fill, but we are out of that position. Okay. But I would be interested to see just how much it was up. And then, it came down yesterday and today it's up higher. So it would be interesting if one didn't hit it in a live account, if they were closer today. But it just has to stay above this 120 mark. And both of those trades, could be successful. And I thought we'd compare them when we were done. So guys, I don't think that there's a survey in the chat today. I haven't seen one, but my ask of you at the end of these classes is if you haven't subscribed to the channel, you'll want to subscribe. You're going to want to hit the like button. Does me a favor in that it helps move this up in the algorithms on YouTube so more people can find this content. And then follow Ben and I in the land of LinkedIn and in the land of X, Barb Armstrong CS, Ben Watson CS. And then last but not least, get out there and hug someone you love. It's a long weekend coming up, so lots of opportunities to be happy and connect with friends, hopefully, and family. So what did we do today? When there is a survey, I always, this is often asked, can we looks like I bought stock twice here. So I'm going to liquidate one of these positions, but we bought 180 shares of stock. And then we bought a call and put the same target in. So I'll make sure that we put that call in. And then we did 2 trades on VLO, a long call vertical, and we bought stock. And we had the same targets on both of them. So guys, thanks to the guys behind the scenes for helping bring this class to life. Thanks to Ben Watson for his help in the chat. And thanks to each and every one of you for continuing to show up. Your future self will be grateful for it. Take care, everyone. Have a great weekend.